Hello, welcome to IGTV. I'm Angeline Ong, and with me today is Martin Harris, Portfolio Manager at Smart Portfolio here at IG. And he joins us at a really exciting time, changes in the ISA space. So Martin, what's happening?
Thanks for having me, Angeline. I think that there's three key changes happening to clients' ISAs that they need to be aware of. These changes are coming in April. So from the 6th of April, there's going to be a new set of rules around ISAs as well as taxable allowances. And so if you've got a stocks and shares ISA in particular, there's going to be three things that you need to be looking at. The first is going to be that the ISA allowance of £20,000 a year is still frozen at that amount. Why that matters is that £20,000 was brought in 2017, and if you kind of look at the amount of inflation that's happened over the last 2 years in particular, we would have perhaps expected that it should have been raised, but that's been frozen at that limit. The second thing is that clients are now allowed, or investors are allowed, multiple subscriptions. So this is the most significant of the changes. What the multiple subscriptions allow is for you to open multiple stocks and shares ISAs within the same year.
So as long as you stay within that limit, that cap of 20,000.
Correct. So you still have to stick to the subscription limit of £20,000 per year. But currently, if you pay money into one stocks and shares ISA, you open a new one and you pay money into it, you kind of have to stick with that for the rest of the year. The new rule coming in from April is that you could open up multiple stocks and shares ISAs, and the benefit is going to be that you could have different providers, or you could have different styles, you could open up different portfolios, so you could blend them together. You can open up one long-term portfolio and then also have a separate stocks and shares ISA that you pay into, where you've got individual stocks such as Nvidia. And the third one is going to be the flexible transfers. So what it is you're now able to do partial transfers. The partial transfers currently are not allowed. If you were to transfer out of your ISA into a new ISA, you have to transfer the full balance. So if you've got £20,000 in your ISA and you want to transfer it to a different provider or a different account, you have to transfer it in completely. What will now be allowed is that you can leave half of it in the existing account and transfer £10,000 out. So you've got the partial transfer there, and that's the new flexibility that you are being allowed with the new set of ISA rules.
So Martin, what all this says to me is there's going to be more competition in this space, and that can only be good for the consumer, right?
It can. I think ISAs are going to be much more prominent going forward. What we are seeing is that your taxable capital gains allowance as well as dividend allowance, also that exemption is being reduced. So it's actually being halved from April. Currently, capital gains tax, your exemption is on £6,000 and £1,000 for dividends. Both of those halved, so £3,000 for capital gains tax, £500 for dividends. So the importance of having your investments inside an ISA and being exempt from any tax is so much greater. People who utilize a bed and ISA strategy, selling out of a normal stocks and shares account into an ISA, will need to take note of that, because that amount is now reduced. But still, the ISA has now really become a lot more prominent because of the restrictions or increases on your taxable space in your investments.
So more flexibility and perhaps a bit less messy.
Definitely. ISA, far more flexible, less hassle, much easier to deal with, and more attractive because of the taxes that you faced outside of the ISA.
So let's take a look at the products then that we've got here at IG. What sort of products can consumers or clients looking and watching and listening to this show have to choose from?
Right, so I mean, ISAs, IG specializes in stocks and shares ISAs. So we have a normal stocks and shares trading account that anyone at IG might be familiar with. If you want to buy individual stocks, we talk Apple, Nvidia, BP, Shell, Rolls-Royce, they're all available within your stocks and shares ISA. We also offer a smart portfolio ISA. So that might be for someone who's looking for a managed account, something longer term, and that's a multi-asset account trading in both, or investing rather, in both fixed income, equities, as well as alternatives like commodities. So that's our smart portfolio. And on the other side of things, not in the ISA space, we do also offer SIPs, so those self-directed pension investments.
So a final question, those listening in and watching this, if they're asking, well, what sort of time frame should I be looking at, on how should the mix differ? So if someone has a 30-year investment horizon, how would that differ to someone who has 50 years, for example?
So certainly if you've got a very long time horizon, the benefit of compounding your returns over time, you're going to be due to pay a significant amount of tax. And that's why the ISA is so valuable. Certainly, if you're a very high income taxpayer, what you'd want to try and do is use your pension or your SIP to reduce your taxable income first, and then any excess you'd put into an ISA. For someone who isn't at that sort of additional rate, the value of the ISA, if you even consider something like Nvidia in the last few months, already just this year Nvidia is up over 40%. The tax that you'd need to pay on a sizable position in Nvidia would be significant. Inside the ISA, you don't have to worry about that. So even short term as well as long term, the taxable implications of what the ISA saves you are really important, and that's why it should be the first place that you start.
Thank you very much for taking us through all those interesting changes. It's a really interesting space to watch. Martin Harris there from IG Smart Portfolios. Thank you for watching.